The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to this afternoon's presentation of Nadex News Trading. So very excited to be with you guys again. For those of you that are brand new, that weren't here to the presentation 2 weeks ago on parabolic retracements, welcome. I'm very excited to have you. With everything that's going on right now in the outside world, and I say outside because we're all stuck at home at this point, it's obviously been crazy. The markets have been absolutely just insane. There's no other way to put it. I can tell you last night I was looking at some of the 24-hour movements in the currency market, and 640 pips. I mean, things that are moving 4, 5, and 6 times what they would typically do before this entire crisis. Just absolutely insane. So markets are nuts. News trading is what we're going to talk about today. Interesting enough, I don't know if you guys have, for those of you that have been looking at the indices and watched the parabolic retracement webinar 2 weeks ago, if you haven't watched it, go back and watch it in the educator section on the Nadex website. There's been parabolic retracements literally every day. Biggest day down, biggest day back up again the next day, then the biggest day down again, and then the biggest day back up. I mean, it's just been parabolic retracement again and again and again. So today's presentation is actually going to be the other side of the equation. This is the news side of it, handling it before versus the parabolic retracement, which is after. In this current environment, there's a lot of the news going on right now, and it's really controlling everything that we do. It has been a little bit more challenging, and one thing I'm going to kind of preface before we start today is I would consider the market we're in right now as a trader's market. It's not an investing type market. There's just too much whipsaw back and forth, and fear is obviously controlling markets, guys. So when we're talking about it today, make sure that you guys are always keeping risk and focus first. All right. So with that being said, let's just jump in. If you guys do hear a little voice, my daughter is actually with me today. She's my little buddy. She was watching Little Baby Bone, but managed to pause it. So if you do hear a little voice, there is a little one bouncing around, but she actually likes doing charts with Dad. So to start off, let's go over the Nadex risk disclaimer first. Now, trading on Nadex involves risk and may not be appropriate for all. Members risk losing their costs at the end of the transaction, including their fees. Okay, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex is subject to U.S. regulatory oversight by the CFTC. Okay, now this is very common. Here's the one that we use as general. No representation is being made that the use of this strategy or any system or trading system or methodology will generate profits. As you've seen before, past performance is not necessarily indicative of future results. The most important thing that I like to talk about in this is no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed. And most importantly, don't trade with money you can't afford to lose, okay? And with that being said, I want to tell you guys, I know at this point there may be some people that feel like they're in a desperate situation, but if you guys do not have, again, money that is kind of disposable, jumping into trading is not the way to do it. The risk, the stress, the pressure, that's not the time to start trading. Again, go into a demo mode and build up, again, some confidence, and do it in less stressful times. The worst thing you want to do is trade out of desperation, and it's something that from the bottom of my heart, I hope you guys are following that, okay? So with that being said, let me tell you who I am for those of you who are new. I know many of you know me, but for those of you that don't, I am the president and CEO of Keep Trading Simple. I've been involved in the market since about 2000, basically 1999, right around the tech bubble crash. I actually live in the DC area, so it was something that definitely touched home around here. So I've seen a few market crashes. I'm part of that generation that, 401ks for us are kind of a joke, because when we started, it crashed, and then we got, 5 to 10 years into our kind of working lives, what happened? Bam, it crashed again, and then now we're seeing it, yet again. So it's like the third crash we've seen within our working life career here. But basically what I do is I help people learn how to trade the markets, and I really try to keep it as simple as possible. I remove a lot of the distractions. I've created a number of different strategies and things to help people trade. 2 of them in particular, the 30-minute trader as well as the 5-minute binary courses, are designed to use specifically Nadex. For those of you that were here, obviously 2 weeks ago, parabolic retracements is another one that is a strategy that matches up really well with just, again, news trading and Nadex. It's something that you can use other things to trade with, but Nadex is one of those things that is near and dear, and I just love it for so many different benefits. I have spent a number of years traveling around the United States and Canada helping other traders get introduced to the market and, to kind of learn to start kind of doing it themselves. But For me, obviously, you guys can hear the little one. I am a family man at heart. Again, I'm not a person that believes in spending 16, 18 hours a day sitting in front of a computer. I'm a big believer in using technology to alert you when there's good trading opportunities. Very, very big in that. And then again, for me, Nadex really kind of falls right back into that. All right. So, oh yeah. All right. So today's agenda, guys, we're going to be defining what is actually a news breakout, how you can find them, and how they can be traded, okay? Most important thing is, again, strategies are great, but you have to make sure that you have the right environment to actually trade them in. And I'm also going to cover 3 separate things today. I'm going to cover how to trade them with binaries, call spreads, as well as touch brackets. Now, our presentation today is only going to be about 30, I'd say 30 to 40 minutes today. So am I going to be able to go into every little single bit and every nook and cranny of this? Absolutely not. But what I can do is I can give you guys the basis of this, and if you want more, you're more than welcome to contact me after the fact. I just want to be able to create some kind of creative juices to see if you guys can start, applying these to what your strategies currently are, and again, maybe help give you some pointers in kind of making it a little bit better. All right. So let me click the slide down here. There we go. All right. So let's start. What is a news breakout? All right. What is news trading, and why would you want to do it? It sounds dangerous. People will tell you, hey, listen. You shouldn't be trading, news breakout stuff, right? I mean, news is dangerous. Don't do it. And these are the same professionals that are sitting there trying to sell you an indicator and telling you to, subscribe to their newsletters and to buy this and to buy that. Again, let's kind of break it back. Take one step back. So what is news trading in general, right? So every single day, right, besides Saturdays, different countries have economic news releases. Now, news releases are typically planned ahead of time. In this chart, you can see that we have the previous, we have the forecast, and there's different, the forecast is created by many people. Now, with news, there's one kind of component that they can't plan for, right? They don't know actually what the data is until you get the actual number. Now, the way the market works is it has an idea of what the forecast is, and what it will do is it will actually adjust itself ahead of time in preparation of the news, okay? In preparation of news. Now, with that being said, if they don't always know, does that mean that their forecasts are right? And the answer is no, okay? And that's where this news trading strategy really comes in. Now, there's 2 parts to news, okay? Let me drop one slide down. There's expected and there is unexpected news, all right? Those are the 2 outcomes. That's it. They either hit the number or they didn't hit the number, all right? Now, when we get an expected news release, there is very, very little movement. I mean, the market has already priced it in. I mean, what would there need to be to, why would you need to move it, right? There is sometimes a retail response to it, but the retail response will never be as big as what, obviously the insider, the big money responses are going to be, okay? Now, when there's an unexpected result, yes, little one, the unexpected result, there's typically huge movement inside of the markets. And the reason why is because, again, the market needs to adjust to make sure that it is within the right parameters, right? And that, unfortunately, doesn't always happen. Now, the most popular news times typically are 4 a.m., and some of you may be asking, 4 a.m., what are you talking about? I'm sleeping at 4 a.m. Well, remember I said countries, not just the United States, countries all around the world have economical news releases. So when the London market comes online, typically a lot of the news releases are about 4:30 a.m. Eastern Standard Time. Hard if you're an East Coast trader, but if you're a West Coast trader, it's just like staying up a little bit late, right? Then the other most popular times, obviously, the U.S. data is between 8 a.m. and 10:30 a.m. in the morning. 2 p.m. a lot of times is where those FOMC notes come in. And then 9:30 p.m. you may say, wait a second, 9:30? What are you talking about? Well, guess what market comes online then? The Australian and New Zealand markets. Okay, so we get a lot of Australian news at night. Those are actually some of my favorite time to use these trades. All right, so let's look to see what they look like. So this is what I'm talking about, unexpected versus expected, right? So you would typically see, and I think you guys can see my cursor, but anyway, looking in the second to last category over here, you can see that there is a forecasted number. Now, this is what the experts, the industry, this is what they expect the actual economic news release number to come in at. Then we see what the actual is, and you can see, wait a second, there's red over here, right? Yeah, obviously they miss it, okay? And in doing analysis and saving this data, depending on the news release, there are sometimes up to 70% miss rates with the forecasted versus the actual data. And this provides a number of opportunities, and again, basically around the clock, okay? Now, question is, what do the responses look like, right? Well, this is what happens when you have an expected move, right? Here's crude oil inventories, right? The forecast was that it would come in at minus 3.3 million, right? Well, the actual came in as minus 3.3 million. Now, there's obviously a little bit of indecision. You can see in this 5-minute candle over here on the left, oh, you know, it may have moved a little bit, right? But if you drop it down to the 1 minute, you can see there really wasn't much, right? I mean, the price went up, the price went down, but it basically opened and closed in that 1 minute candle at exactly the same spot. The market had already factored in the fact that, hey, listen, at minus 3.3 mil, that's where we should be, okay? No surprise. Now, on the other side of the coin, the unexpected, what happens when the forecast is wrong? That's when you get things like this, okay? Now, in this case, if you look on the bottom left-hand side, these figures are a little bit older. These were slides that I had created a bit back inside of the course that is associated with this. But you can see, again, you know, the forecast, and I don't even care what it is, but this is natural gas coming in at 38 bill, and it came in at actually 28. So a difference of 10. You can see the price from 10.15 literally spiked all the way up, went from 289 all the way up to 299, which is an absolute huge move in a very small time period, right? Looking on the right-hand side, let me adjust the microphone there. Sorry, the little one tried to pull it off. This was a Canadian number. Now, do you need to study what the Canadian GDP is, or do you need to study what natural gas is or natural gas storage is? The answer is no, okay? But just know in this one on the right-hand side, the forecast for Canadian GDP came in at 0.2%. The actual came in at 0.6. It was much, much better. And look what happened. This is actually the dollar Canadian currency pair. It dropped 100 pips in 50 minutes. And just to give you, again, if you're not a currency trader, okay, if you're not a currency trader, you may say, I don't have a clue what a pip is, Brian. In a typical day before all this craziness, the dollar Canadian would typically move about 60 pips a day. Okay, about 60 pips, 60 to 65. This is a 100 pip move, which is over what the average daily move would be in 15 minutes because of that miss. Now think about it. If it's moving over an entire day's worth of movement over the average, right? Is there trading opportunity there? And the answer is yes, okay? This is why focusing on kind of the forecast versus what the actual is great. Now, are these things that you want to trade before you know the news? Probably not, because again, then it's just necessarily a guessing game, right? You don't know that it's going to be a 0.6. It could be a 0.5, a 0.3, a 0.2. But there are ways that you can use risk to reward and make these actually beneficial setups for yourself, okay? Now, Nadex breakouts. You can literally pretty much do it on anything, anything that has some type of release. This is an example of, again, this is natural gas, but you can do it on natural gas inventories. You can do it on interest rates. You can do it on oil inventories, FOMC notes, non-farm payroll. If you're an indices trader, in this day and age, you can do it on press conferences by governors and by President Trump. It's really anything, right? Any type of news release. Now, in this current environment that we're in right now, obviously this is a once in a lifetime event, not once in a lifetime, but it's the biggest one we've ever seen at this point. Things are a little bit crazier now with when somebody's speaking, but if you go to some of these news sites, and I'll show you those in a second, right? You can find economic news releases almost every single day, okay? So these things happen just in the normal course of business, and most people don't pay any attention to them whatsoever. They literally have their eyes glued to the US stock market, and they're literally saying, okay, what's gonna happen here? What's gonna happen here? What's gonna happen here? A lot of people don't realize a lot of this crashing in the markets right now, obviously we know what it's coming from, right? But look at things like gold. Gold right now is collapsing. Okay, if you think gold's collapsing because, you know, again, because of something the United States did, you're wrong. Okay, it's actually a supply issue based out of China. Okay, Chinese news, Australian news affects gold very, very heavily, and a lot of people don't realize that. Okay, so there's a lot of things we can trade. Now, I mentioned the different things. This is Canadian, you know, CPI 76 pips in 30 minutes because of a miss. These things move. You know, here's U.S. economic data, FOMC notes. Again, 8 points doesn't seem like a lot, right? When we're talking about what's happening right now, but in the normal kind of overall market process, again, 8 points in 20 minutes is quite a large move based off of kind of a news release. Okay, so a lot of these things, again, knowing when they're going to happen is really the key. Now, where do you do that? Here's 4 different websites. There are others out there. I'm not ranking these in any type of order. Forex Factor is one I use a lot. Daily Effects I'm pretty much on every single day because they have a lot of information. They just recently updated the website. A lot of great stuff on there. FX Street is another one. Investing.com is another one. You can use Yahoo. There's a lot of different websites. If any are using IG to trade, IG actually has it where it'll pop up on their charts with economic news releases. It'll show you a little kind of calendar icon. Hey, listen, there's a news release. Here's the actual. Here's the forecast, and here's what the actual is. So a lot of broker software actually has it as well. And IG does a very excellent job of doing that if you guys have ever used that platform for currencies. Now, the different websites, they look all the same. It doesn't, the format is more or less the same on all 4 of them. again, they're showing you the list, the calendar view. Again, these are the four, right? Forex.com, DailyFX, FX Street, Investing.com. It's all the same. Many different websites have them. MyFXBook is another one that has it. There's certain things they all have, and it's important to understand that. Okay, not all news is created equal, and this is another one of those important steps. So typically, and this is pretty common across all sites, you will typically see red as being the most high impact news releases. Now, a lot of you may know this, and that's okay, but not all countries are as important as other countries as far as this goes. It's really what's going to be the biggest market mover. So things like the pound, right? Pound red news will typically move certain pairs. The dollar obviously moves a lot of things because most assets out there are compared or priced inside of the dollar. But in this case, you can see that the pound is red. The euro right now in this final CPI is orange, and we have the euro final core CPI is yellow. So the red in this case matters. The euro, probably not too much. I mean, it's going to depend on the day or what the actual release is. And a low impact, you can just ignore it. It's not going to move the market enough. The market's not going to necessarily care. So make sure that to trade something like this, you are using the most high impact, best kind of markets, right? So for example, if there is dollar news and there is Swiss news, okay, the dollar is going to trump the Swiss news, okay? So again, the larger the currency, the larger the country, the more of an impact currency it is, the more move the market is going to have when it's wrong, okay? Now I mentioned kind of how to set these things up. They all have kind of this kind of same drop down. You can pick which country you want, which currencies you want, the impact levels, what event types. What I found is it doesn't necessarily matter as much the event type, but there are obviously certain, again, as I mentioned in the parabolic retracement webinar, there are certain news releases that move the market more, right? That have a bit more power. But you can see, I mean, this is just one example, August 16th. I mean, again, this is from last year, but you can see having this thing on high impact, you can see all the high impact news starting at 4:30 in the morning with pound news to 5 a.m. with European GDP, which is a number that can definitely move the markets, to 8:30, 10:30 crude oil, FOMC at 2, 6:45 PPI, 9:30 p.m. at night unemployment rates and unemployment change. As you guys can see, there's a lot of different opportunities to be able to trade this. Okay, now I did mention Chinese news. Does it matter? And this is not just with COVID, guys. This is not just with the current situation we have going on. Chinese news moves a lot. Okay, it affects Australia, it affects New Zealand, it affects pretty much most of the commodity-based currencies because China is really the big grower at this point, right? If China is expanding and their economy is doing well, they are purchasing goods and services. Export countries, commodity-based currencies tend to do well. China all of a sudden has a problem where their growth is down, kind of like what we're seeing right now. Countries like New Zealand will crash, Australia will collapse, Canada will collapse, gold prices will collapse, copper prices, silver, okay? Because of the type of nation that they are, okay? Very important to understand, like the Australian currency right now, I don't know if you guys have watched it, it's unbelievable how far down it is. I mean, you can't even find areas where buyers are. It's absolutely amazing how far it's going down. And again, it has nothing to do with Australia, right? It has to do with what's going on in China as well as the world, okay? Now, you have a smartphone? Great, how can I catch all these things? Well, guys, all these different websites have apps you can download. It'll actually send you guys, look at here at the bottom. This is MyFXBook. It's one of the other one that I didn't name. It'll actually send you notifications to your phone and say, hey, listen, there's about to be a high impact news release. You may want to get back to your computer or you may want to open your app and see if there's a trading opportunity. So there's no excuse to not actually catch these things. I mean, again, if you're working, it may be harder, and I understand that. But there's so much technology. Use the technology to alert you when these high impact news releases are coming out. That's how you're able to catch these. That's how you're not able, that's how you're able to not be kind of married to your computer all the time. Okay. Now, whoops, wrong one. I'm hitting no different buttons. So how do you trade these things? Okay, depending on what you're trading, again, there's not touch brackets for everything, but there are 3 different ways you could actually trade these news breakouts. You can use Nadex binaries, and those are actually one of my personal favorite. You can use Nadex call spreads, which again, I was a huge user of Nadex call spreads for these. And now we do have touch brackets. And again, at first I was a little bit slow to adopt, I will admit, onto the touch brackets, but there is a time and a place for touch brackets. And this is one of those situations where they can be very, very good based off of how they're built. And I'll show you those in 1 second, okay? Now, let's start off with binaries. Many of you have had experience with binaries. You understand binaries. You're very comfortable with binaries. But just as a reminder to you guys, remember, a binary is based off, it's basically a limited risk contract based off yes or no, right? Did the market move above or did it move below? And the way the payouts work, you either get 100 or you get 0. That's it. It's kind of an all or nothing kind of proposition, okay? For me, what Binaries offered was a way for me to take a kind of a low risk kind of, again, I know what my risk is going into it. It can never be more than what I put in, right? Could I lose that? Sure, I could absolutely lose that as well as my fees, but it's very, very simple, okay? So what I did, again, my background when I started, there wasn't, there was no binary contracts back in 99 when I was trading. But what I did is I started off in the traditional options market. So what I did was I borrowed, when I created this, I borrowed a strategy taken from the traditional options realm and then applied it over into binaries. And let me show you, you guys should be familiar with what, options charts look like. So what I did is I basically created a Nadex strangle, okay? In this situation, again, I'm just explaining, I can't go super into it, but this is kind of, how it was formulated, right? This middle line here in the middle, if you can see my cursor, you can see this is a $50, again, this is the actual price, okay? So what you're able to do here is you're able to buy binaries. Remember, this is price, this is not what it costs, but I could buy the 55 strike and sell the 45 strike, meaning that if price goes above 55, I'm in the money. If it goes below 45, I'm in the money. If it gets stuck between 45 and 55, guess what? Bam, I lose. Okay. Now, this particularly matched up well with Nadex because remember, it's kind of an all or nothing, yes? Meaning that if price goes above 55 at expiration, bam, I get my $100 payout. But what happened to the other side if I sold this side? I don't get anything over there. So again, what your risk is, your maximum gain is $100, and then you minus whatever your premium is paid. Now, you got to pick the right strikes, obviously. I mean, if you do a 50 and a 50, obviously you're not getting paid anything, right? So you got to make sure that you do this in a correct way. But your maximum loss is basically what you pay to get into the trade. So again, there is a little bit of a science about picking the correct strikes to be able to get into these things, right? And again, if you guys want to take, you're more than welcome. If you want to take screenshots, go ahead. There will be a recording to this. I believe Nadex sends it out to everybody, as well as it'll be on their page, and I'll probably put up on my page as well. But here's an example right here with the S&P 500. Because and I mentioned a lot of currencies. I'm primarily a currencies trader, but here's an example with the S&P 500. Now, we knew Yellen was speaking at 12 in the afternoon. Okay, we knew that there's probably going to be probably some fireworks from this whole thing. We knew that something was going to happen, right? So at this moment in time, you can see that the indicative value is at 24.44. Obviously, we're a little bit different, right? This is from 2017. I didn't want to use current prices because with all the volatility, there's a lot of premium baked in. It's a little bit hard to do right now, right? But anyway, as you can see, we had about $18 risk going in when we bought this contract, and on the other side, we had about what? $12.75. So in this case, what we did is we built this Nadex strangle using this risk level. Cost us $12.75 plus $18.75, right? That's $31 worth of risk. Minus that from 100, that's $69 reward. So it's basically a 1 to 2.2 risk to reward ratio. Now, what needs to happen at expiration to be profitable in this is we need it to move at least 4 points up or 5 points down at expiration. Now, again, this is at 12 p.m. in the afternoon. We have 4 hours and 15 minutes to get there, and we needed to close there at expiration. So you guys can kind of see, did Fed Chair Yellen bring some fireworks in her speeches at this time? The answer is absolutely yes. Okay, so that's just one example. Here's another one with crude oil. Kind of the same setup, okay? We're not buying the at the money, you're buying a little bit outside of the money. And same thing, we know there's FOMC, we know there's, I'm sorry, not FOMC. There's going to be an oil inventory report, and does the oil inventory report have the potential to move this thing? Absolutely. Okay, so in this case, again, you take 12.75 risk on the top, you take 9.25 risk on the downside, meaning that worst case scenario, it literally closes at 47.07. It doesn't move whatsoever. You have $22 risk per basically per pairing inside of this, these trades. If it does go above $48, means it goes $1 above, or it goes $1 down at expiration, you get the payout. Again, you get that $100 payout minus what we paid to get in, $78. So it's a 1 to 3.5 risk to reward ratio. You guys seeing this? Hopefully the creative juices are going. There's crude oil. Here's a currency trade for those people that are currency traders. Same thing. This was an economic news release with the dollar. Okay, this one was actually set up overnight. Again, you guys can see that it was $17, but there was a big news release in the morning that I was kind of counting on. As you can see, to get into this one, I knew that we had the entire overnight session as well as the news. The indicative value is 117.3, right? So we're kind of sitting right here in the middle, right? Kind of sitting right in between these two strike prices. The risk on the top side was 14.25. The risk on the downside was 14.25. Add those together, 28.5 risk. Potential profit on the other side, if it goes whether above or below at expiration, $71.50, a 1 to 2.5 risk to reward ratio. Okay. Now, for me, I find these risk to reward ratios very attractive. You may not necessarily like them. Again, that's personal preference. I know there are some people that love in the monies, but for me, that there's too much risk in that. Risking a whole lot to make a very, very little doesn't do anything for me. I prefer this end of the spectrum. But you need to make up your decision in your trading accounts what you find to be more attractive. For me, this is what I find more attractive. Okay. Now, let's talk about call spreads. Okay. I always think that call spreads are kind of for lack of a better word, kind of the forgotten Nadex asset. A lot of people love the idea of the binaries, but they don't look for the call spreads as often. I actually love the call spreads. For me, I find that I tend to get a little bit better risk or lower risk in these. And again, they have the same principles. If the price goes against you, you can only lose what you put in, including fees. But again, what they do is it's not an all or nothing, right? The spreads are, if it goes this far, you will make the profit, as it incrementally goes, tick by tick value, right? Trading more like the underlying asset versus what the binary is, where it's kind of an all or nothing, all right? Kind of the same risk graph in this one, instead of being a cliff where it's going straight up or down, this one obviously, as it's going to tick, 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 tick. So if it stays, obviously both of them are closed completely, you get nothing, right? But as this one moves, obviously you start making until you've overcome what the cost was to get into the trade originally, and then you make your full profit target, right? So what I find is the spreads tend to be a little bit farther out, depending on the spread you use. They can be a bigger than a $100 maximum. So this one you have to focus on what the range of the spread is minus the premium paid on the losing side. So a little bit more complicated, but let me show it to you this way. I think this will be a little bit better. Nadex has a bunch of overlapping spreads, right? So this is why you got to be very, very careful in your placement of the call spread when you're using it for news. Obviously, if price is in the middle right here, right, and you have the ceiling and the floor are kind of, if you're equidistant between those two, you're going to have more risk than if you get something like this on the right-hand side where, you can see your ceiling number 2, your floor number 2 is basically where price is. It's kind of an at the money. There's no value in it. It hasn't gone anywhere, right? And vice versa, floor and ceiling number 3 are right below it. And same thing, it's at the money. So you don't really have indicative value. You just have some premium in there. That's what the cost is going to be based off of. But why those are a better option than kind of number 1 is because of this, right? I mean, purple is the risk in the first one, right? Because if you're buying this, or again, if you're selling it, vice versa, it could be on the top side. But look on the right-hand side when using ceiling 2 and ceiling 3. You obviously have some risk in the middle, right? If it doesn't move, are you going to lose that? Yeah, you'll hit your maximum risk, sure. But if you have one of these big explosive moves, look at the amount of risk to the amount of reward, profit potential that you have, okay? So again, that's the risk that you run in these things. There's a little bit of guessing, sure, but there are certain news releases that are statistically higher. They have higher chances of missing. And at the end of the day, you need to focus on, does the risk justify what the potential reward is? Is it worth taking? Sometimes it's not. Sometimes with call spreads, you will not get the prices that you like. It just doesn't make sense. And again, that's where you go to a binary, or maybe what number 3 is, which is a touch bracket, okay? Now, touch brackets are the new guys in the game, right? The new ones, and they are expanding. I actually saw that in kind of demo in the new platform. You'll see that gold and oil were over there, and I believe next week gold and oil are coming online. I believe that's what's coming. That's what I've seen for touch brackets. Now, touch brackets have one advantage over kind of the other two. Now, touch brackets are like binaries, right? That you can't lose more than you got in, but the difference is, if the price goes past where the bottom of the binary is, it doesn't automatically close it down. There's still a chance that it could come back. A touch bracket is different, that it kind of has that loss. When it hits the top side, the ceiling or the floor, depending on if you're buying or selling, it's out, it's done, even if price kind of snaps back in. So it does have that kind of one difference to a binary, but the difference is it has a longer duration of time, which for me is huge, okay? So again, you still need to be, I'd say you have to be more right than with a binary, but the difference is we don't have the biggest limitation. The biggest limitation has been removed in my eyes. We have more time. And if the price hits the other side of the bracket, guess what happens? Bam, it closes it down. You take your full touch bracket profit out of it. So that's kind of one of the advantages. It has its stop loss and kind of a profit target already kind of factored into a touch bracket, which makes it very, very attractive, because for those of you that were on the parabolic retracement webinar, what happens? A lot of times these big spikes, what happens? We tend to see a bit of a retracement depending on the type of release it is, if it's a fundamental change or if it's not a fundamental change. in which case, if you had traded a touch bracket beforehand, got that huge spike because the news was wrong, it could have hit the top of the touch bracket, taking you out of the trade, and then all of a sudden, bam, that thing retraces back down again, okay? I will tell you, when I first started kind of trading binaries, that was the one thing that I used to get frustrated with. That I would be good, I'd be above my strike price. I'd be, yes, this is great. And at the very, very end, it started ticking back down towards my strike price, and I would start to get really nervous. It's like, oh, come on, I want that full expiration. Come on, give it to me, give it to me. And then what would happen? It would kind of go right beforehand, right, as it was pulling back. And it's frustrating, right? You know, you're right the whole time. Where a touch bracket alleviated a lot of that stress. So if you're not looking at touch brackets, definitely check it out. Now, touch brackets start at the beginning of the week. Again, this is that duration that I was talking about, right? You could get into something Monday, you know, and again, we have till Friday before the expiration actually value hits. Having those two sides on there, if you're wrong in your analysis, just like the underlying asset, bam, you're out. It takes you out, right? But we have a little bit more time to be right than just with the, you know, the standard, you know, the daily for the binaries or something smaller. Now, here's what the risk level looks like. Just like that other risk graph, okay? You still have to pick a direction in this one, right? We still got to figure it out. But again, we do have a stop loss and a profit target in. So in this case, you can say number 2 and number 3, would they technically, in my eyes, again, this is all my opinion, you have, you know, risk in your account has to be decided upon you. Don't say, well, Brian said, right? Number 2 or number 3, in my eyes, if we're kind of sitting in the middle of a touch bracket, this, in my eyes, may not necessarily be the best strategy because you're taking more risk. But if you can grab a number 1 or number 4, your risk is very, very small. And if it goes against this, you're getting stopped out. And again, that's going to happen in trading, okay? But look at the profit potential. What is the risk versus the reward? Is that a beneficial risk to reward in your eyes? And again, it's entirely up to you. It's your account. You need to solely take responsibility for every one of your trades. But in my eyes, I like this for my account. I like the way the touch brackets work. And again, it's not all assets. I wish they would expand, you know, a little bit, and they are. You know, they are coming online. Like I said, I think oil and gold will be there, which I'm extremely excited about. I would love to be able to use these for oil releases. But as you guys can see here, when you focus on the risk, does the risk of the potential profit target make sense? You know, could you take this off early if you were up 2 to 1 or 3 to 1 or 4 to 1 inside of there because you took very small risk? Absolutely. You don't have to necessarily hold till expiration. That's the other advantage of these, okay? And a lot of people get kind of lost in that. They're like, well, you know, I was going to hold it, but then what do I do? What do I do? You know, if you're risking 1 and you can make 3 and, you know, the position hasn't closed out by itself, could you close it early? Sure, absolutely. It's entirely up to you. And that's what I find myself doing a lot of times. All right. Let me see if I have any questions. Never mind on the next, like, yeah, Mark, you found it. Yeah. So again, there's three different ways that you could potentially trade these news breakouts. Now, again, where do you find them? You look on the different news sites. Okay, that's where it's most important. Look for these news sites, figure out when people are talking. I mean, look at the last, and again, I try to use current events as much as we can, right? I didn't use the prices that we have, you know, the last couple of days because again, they have been absolutely insane. But you know when Trump is speaking. I mean, look at the markets. Look at the you know, the S&P or look at the Dow, right? We've had some of the largest drops. 3-4 weeks ago, we were at all-time highs. We had non-farm payroll numbers that were absolutely amazing, right? We had unemployment figures coming back down again, as low as we've ever seen them, you know, down in that 3.4 range. And then all of a sudden, the virus came out. And what happens? We start getting 1,000-point days, and it's like nothing. And then we have another 1,000-point day. And then what do we have the next day? Oh, it's up 1,200. Okay. Why is the market suddenly moving? Well, what's happening? We're hearing news releases at night. We're seeing news broadcasts. We're hearing news reports. We're hearing unemployment data. All these are news releases that are coming. So it is a bit more challenging of an environment right now because, you know, we're waiting for news releases from different people to release new numbers. But, you know, I can tell you for myself, you know, every morning now, what am I doing? At 10 o'clock, I'm looking to see what my state's new, you know, COVID-19 responses are. At 12 o'clock, Trump has been speaking every day. So I'm watching that as well. Go look at the markets and educate yourself a little bit. We're seeing trends in the European session, and then what happens? Europeans exit the market at around 11:30 in the morning Eastern time, and what happens? All of a sudden, there's a new trend, and the price move for the rest of the day in another direction. Okay. Again, a lot of those are typically based around news events. Okay, so there's a lot of exciting things you can do with this. This is just kind of, I'm just grazing over the top of the surface, but again, you can trade it with binaries, you can trade it with call spreads, and you can trade it with touch brackets. So it is literally, in my eyes, and again, maybe I'm a bit biased, but it's literally the perfect strategy because not only do you have all the unlimited assets that Nadex offers, but you can actually use every Nadex products that you had to be able to trade this, depending on which one matches best to your kind of risk personality. Some of you may be a binary person. Some of you may really enjoy touch brackets. Some of you may like the reduced risk, but kind of the tick by tick of the call spreads. It doesn't necessarily matter. The important thing to focus on here is, are you taking appropriate risk for what this can potentially move? Now, again, for those of you that joined the parabolic retracement webinar, you guys know that I gave you guys the report that I'd gone back and analyzed. All these websites, you can actually look historically how often things are missing. And again, if you want to put the extra work in, great. If not, check out that webinar. I gave you guys a link to download a news report that basically tracked everything in 2018, what the typical moves were based off those releases. It doesn't pertain as much now, obviously, because everything is hyper sensitive right now. We're seeing 3 and 4 and 5 times the ATRs right now. But again, when things start to settle back down again, that report will become valid again with what the average move is based off different news releases and how to trade this, okay? In this environment, I'll tell you right now, in this environment, this is probably the most attractive these touch brackets have looked to be able to trade this news breakout strategy, because right now everybody is so hypersensitive. We hear one bad thing, the market jumps 700 points in an upward direction. Touch brackets are pretty amazing. Now, again, there is a little bit additional premium, so make sure you guys understand that. All right. Now, what are your next steps? How can you put what you've learned today into practice? As I mentioned, we're about 36 minutes in. I'm not able to cover everything. I can't go into picking the correct strikes. And, you may say, well, how can I incorporate this into my trading right now? I'm home. I need to generate money. Let's not focus on them making money. The first thing you guys should do, without a doubt, is make sure that you guys have all opened up a Nadex demo account. If you haven't done it after today's webinar, please go open up a Nadex demo account. Get in there, get familiar with the platform, make sure that you are entering things correctly. And then what I want you to do is I want you to open up an economic news calendar, and I want you to start marking these times off. Set an alarm, set an alert, figure out how you can make sure that you're in front of the computer looking at charts for this to come in, or for these to come in. I want you to look at the prices, look at the strike prices, look to see if you can create effective risk to reward based trades and see how it works out for you, and figure out which ones work best for you. Again, you can use the parabolic retracement download if you want, but you have all the information if you want to compile it and look at it. And again, if we have extra time, doing a little bit extra work never hurts either. Make sure you go open up those demos, okay? Now, what I want you to do as well is I want you to track your progress. See how it's working out. See if you're more of a binary person. See if you feel okay with call spreads. See if the touch brackets are good for you, okay? Once you start getting some, positive experience with them and you're starting to get your confidence up, that's when it's okay to go out and trade these in the live environment, okay? I don't want you to just go out there and blindly do it, all right? Now, that's kind of for next steps. If you have additional questions with what I covered today, and like I said, I can't spend all day kind of going over this. I'd love to talk about it, but if you have additional questions, you can definitely visit me and bounce more things off of me if you like. I have two different websites. I have one that holds courses, one that's just kind of informational. We have Instagram. There's actually a lot of news breakouts that I put up there as well. I've been a little bit slack lately, just kind of basically, I got new learning management software, so I'm trying to make it better, put quizzes and things like that in there to make it even better for students. There's a Discord channel. You're more than welcome to talk about it. Again, questions, you're more than welcome. And it's funny, I'll say the old fashioned way, because everything now is kind of instant on demand. You guys are more than welcome to shoot me emails if you have questions about it as well. And again, just more or less from the bottom of my heart, thank you for joining me today. I love sharing strategies and kind of what how I trade and how I use Nadex to kind of, trade these kind of volatile times. All right. So with that being said, it looks like the little one is telling me it's time to eat. Thank you guys so much for joining me, and you guys take care.